Let me show you exactly how we turn a manufactured home into a cash flowing asset. We acquire and improve homes like this in professionally managed communities, not to rent them, but to structure them for long-term payments.
We place a qualified buyer into the home, and instead of a bank, we become the lender, structuring payments they can actually afford.
But we don't just hand over keys. We verify income, review background, and make sure the borrower can perform. Then we create a promissory note, a legal agreement where the borrower commits to making payments every month over time.
And that note is secured by the home itself. And so now you've got a real asset backing a real payment.
Once that's in place, the note produces income. And now it becomes something you can package, sell, or borrow against. That's how we create structured, collateral-backed cash flow without dealing with tenants, repairs, or day-to-day management.
One home, one note. Repeated at scale.
So this is a look at inside a private credit fund with Silvercrest Opportunity Fund, real assets producing cash flow. This isn't theory. This is an actual asset currently performing in the portfolio. We're looking at property in Mesa, Arizona, Winter Cove, lot 64. It's a 2-bed, 1-bath manufactured home in an all-age community, about 720 square feet. Very much what I would call necessity housing. Necessity-based housing. Sorry, I'm missing a couple calls here. So now here's where it gets interesting from an investment standpoint. We've structured this into a seller finance first lien note at about $54,900 balance, producing $682.69 per month, amortized over a 20-year term. So instead of just selling the home and moving on, we created a long-term payment stream backed by the asset itself with our access with Win Mobile Homes, the largest dealer of manufactured housing here in Arizona. And that's really the strategy inside the fund. We're not chasing appreciation. We're not speculating on market timing. We're structuring debt backed by real housing and collecting payments over time. Now, zooming out, this is just one position across our portfolio. We've deployed about $1.5 million into these types of assets. We're generating about $19,000 a month in borrower payments. So what you're looking at here is one piece of a much larger system. And the reason this works is because of what's happening in the market right now. Traditional lending is tightening, affordable housing demand is increasing, and buyers still need a way to own. So instead of competing in the crowded spaces, we're stepping in as the lender, we're creating the terms, and we're securing everything with the asset. That's the shift. You're not just owning real estate, you're owning the payment stream. If you want to learn more about how this works or see what opportunities are available, you can invest today with Silvercrest Opportunity Fund. This is lot 64, currently performing in my portfolio, one of about 25 positions. It's 54,982 a month. So this is actually the turnkey house itself. So it's a 2-1 off major cross streets of McKellips and Country Club. I'm bouncing a couple calls here, so we'll get through this morning. But one of about 25 positions currently working in my portfolio. We bought it in an as-is condition, rehabbed it to its turnkey product, as you see before you, and the buyer-borrower has been performing for upwards of 6 months. So this is a seasoned note, double underwritten, Dodd-Frank compliant, currently performing in the Mesa market. You know, do your 1% rule on 54.9 and tell me we're not outperforming the market outside complications of landlord and tenant strategies. Here's a little walkthrough video, actually, it looks like. But really, to outpace inflation, have a safe, secure, stable position, and still earn an above-average return is virtually non-existent outside this asset class. My partner's calling me a couple times. We'll have to tell him I'm live here in a second. But this is what it looks like when we acquire a note. We've got the full collateral file, actually, the promissory note, the contracts, the offer to purchase photos, final closing payout, title company. These are all sensitive information, so I won't show you these actual documents, but would be happy to take that into consideration if you are accredited and wanting to participate. Could kind of walk you through what these collateral files look like. Here's some current some during rehab photos that we hadn't finished out the granite yet. Just kind of shows you from top to bottom, we're not just the lender. We bought this home, rehabbed it, sold it on seller financing, got the buyer borrower Dodd-Frank approved in order to qualify for the home, and packaged this monthly payment for them to match or beat market rent. And let's just see what rent is going for within this area. We'll have to be a little more zoomed out because we weren't meant that many options. So as a 2-bedroom in the Mesa market, this buyer borrower is paying $682 for the home payment and another $650 for the lot rent. For a 2-bed, 1-bath, really kind of 2-2, 2-1, what are comparables within this area when she's paying about $1,300 a month for less than what she's paying? Actually, if you look at these 2-bedroom options, it's $1,800, $2,000. There's one as low as $1,100. That's an interesting one. But average is $1,600 to $2,000 a month here in the Mesa market, here off apartments.com. And that's not even quoting what single family rentals are going for currently. So the availability for this buyer borrower off like major cross streets over here of like Center and McKellips, she owns the property, but what are her alternatives for housing? Here it is right here at apartments.com, public information. So her availability, if she ends up going to default for housing at less or what she's paying, for her to have an easy way to get out of the property, in other words, a non-performance, is little to non-existent. She's going to pay more somewhere else at the end of the day. So that just secures, additional safety, stability, security within the program. This property we acquired in this condition here, turned it to a turnkey home. Seller financed that property through Win Mobile Homes, the licensed dealer of manufactured housing. We've done over $30 million in manufactured home seller finance and sales transactions in niche market manufactured housing here in Arizona. We have, dedicated sales staff. We have about 50 homes in inventory. So feel free to check out some of those. Just for instance, lot 218 and with Win Mobile Homes currently for sale. And these will eventually turn into seller finance notes that come available at mobilemailboxmoney.com for private investors or hedge funds, other operators raising private capital for high yield situations. That's where we post our notes for sale. And then the fund is where we absorb and participate in the long-term passive cash flow of a seller finance note position, paying our investors 10 to 14% interest on an annualized basis, interest bearing in as little as a 30-day program, pending accreditation. That's Reg D 506C, accredited investor fund. We're currently raising at 50 to $1 million increments. We've got 3 people watching here this morning. I'm going to see a pad split here at 11 to see about potential for another pad split in the Tempe market. We have a few homes going in escrow and 2 closings, actually 3 closings here in the next couple days. So those are all notes that come available to the platform. Hopefully we'll end up hitting a $5 to $10 million benchmark here in the next 60 to 90 days with your help and participation. One step closer to financial freedom. That's what we call mobile mailbox money. Have a great day.